I am AI avatar of CA Ratan Mundra. The Central Board of Indirect Taxes and Customs, commonly known as CBIC, has issued instruction number 06/2026 to clarify an important issue related to drawback claims for goods supplied from special economic zones or SEZs to domestic tariff area units. This clarification directly impacts exporters, SEZ units, customs officers, and businesses engaged in international trade operations. Earlier, several field formations followed different practices while processing drawback claims. Some customs authorities denied drawback benefits to DTA units on the grounds that supplies from SEZ to DTA were not considered imports. The latest clarification removes this confusion and provides a uniform interpretation across India. The clarification originated from observations made in Audit Report number 33 of 2025. During the audit review, it was noticed that different customs offices were adopting inconsistent approaches while processing duty drawback claims filed under Section 74 of the Customs Act 1962. Some field formations rejected drawback claims because they did not recognize movement of goods from SEZ to DTA as an import transaction. This inconsistency created uncertainty for businesses and affected exporters seeking legitimate drawback refunds. Therefore, the board examined the issue in detail and issued a clear legal interpretation to resolve the matter permanently. Under Section 30 of the SEZ Act 2005, whenever goods are removed from an SEZ into the domestic tariff area, customs duties become applicable. These duties may include basic customs duty, anti-dumping duty, safeguard duty, and countervailing duty, depending on the nature of the goods. The SEZ framework treats special economic zones as foreign territory for trade and duty purposes. Because of this treatment, movement of goods from an SEZ into the domestic tariff area is viewed similarly to an import into India. This legal understanding forms the foundation for granting drawback benefits under Section 74 of the Customs Act. The SEZ Act provides a specific definition of the term import. According to Section 2(o) of the SEZ Act, import includes bringing goods or services into an SEZ from outside India, or receiving goods from another SEZ unit or developer. This broad definition establishes the unique legal status of SEZs within the Indian trade ecosystem. When goods leave the SEZ and enter the domestic tariff area, the movement is interpreted as bringing goods into India from a foreign territory for customs purposes. Therefore, DTA units paying customs duty on such clearances satisfy one of the essential conditions required for claiming drawback under Section 74. Section 74 of the Customs Act 1962 allows drawback benefits on re-export of imported goods on which customs duty has already been paid. This provision is designed to reduce the tax burden on businesses when imported goods are eventually exported out of India without substantial use or modification. For drawback eligibility, two important conditions must be satisfied. First, the goods should be easily identifiable. Second, the goods should have been imported into India. The CBIC clarification explains that goods moving from SEZ to DTA fulfill these conditions because SEZs are treated as foreign territory for customs purposes. Before this clarification, several DTA units experienced rejection of drawback claims because some customs authorities believed that goods coming from an SEZ could not be treated as imported goods. This interpretation created practical difficulties for businesses involved in re-export activities. As a result, exporters lost opportunities to recover customs duties paid during SEZ to DTA clearances. The absence of a uniform interpretation increased compliance risks and created confusion among trade stakeholders. The new instruction aims to eliminate these inconsistencies and ensure uniform implementation throughout all customs formations in India. CBIC has now officially clarified that goods cleared into the domestic tariff area from an SEZ unit after payment of applicable customs duties shall be treated as imported goods for the purpose of drawback under Section 74 of the Customs Act 1962. This means that if a DTA unit later re-exports those goods, it becomes eligible to claim drawback benefits subject to fulfillment of other procedural requirements. The clarification provides much needed certainty and strengthens the legal position of exporters operating within the SEZ ecosystem. The clarification is expected to provide major relief to exporters and DTA units engaged in re-export activities. Businesses can now confidently file drawback claims without fear of rejection based on differing interpretations by customs authorities. This will improve liquidity and reduce operational uncertainty. Additionally, the clarification will reduce disputes and litigation between taxpayers and customs departments. Uniform implementation across India will create a more predictable trade environment and support India's export competitiveness in global markets. This is particularly beneficial for industries relying on imported components or SEZ-based procurement chains. Although the clarification grants eligibility, businesses must still comply with procedural requirements under Section 74. Proper documentation remains extremely important. Companies should maintain records of customs duty payments, import documentation, invoices, and proof of re-export. The goods should also remain identifiable during the re-export process. Customs authorities may verify serial numbers, product descriptions, packing details, or other identifiers before approving drawback claims. Therefore, maintaining accurate records and compliance systems is essential for smooth processing of claims. Instruction number 06-2026 represents a significant clarification for India's trade and customs ecosystem. It confirms that goods supplied from SEZ units to DTA units after payment of customs duties are to be treated as imported goods for Section 74 drawback purposes. This removes ambiguity and aligns customs practices across the country. For exporters, the instruction creates better certainty, improved compliance clarity, and stronger financial support through drawback refunds. Businesses dealing with SEZ transactions should now review their existing processes, ensure proper documentation, and take advantage of the benefits available under the clarified legal framework. Moon SEZ and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence, a pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup, operational support, and handling compliances. Risk management, renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university, BATF, and ancillary regulations and fintech. Expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSC. Comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network. Scan the QR codes below to stay connected with us.